Look, I need you to be honest with me for a second. You've got maybe $15,000 sitting in a high-yield savings account right now, earning, let's say, 4.5% APY, and you feel pretty good about it, right? You're beating inflation. You're being responsible. You're doing what all the personal finance gurus told you to do. But here's what's actually happening. You're losing money. Not literally, but opportunity-wise. You're leaving hundreds, maybe thousands of dollars on the table every single year. And the worst part? The solution is so stupidly simple that when I explain it to you, you're going to be mad at yourself for not thinking of it sooner. My name is John, and I spend way too much time thinking about how to extract every last basis point out of my cash savings. If you're someone who's got an emergency fund or short-term savings just sitting there in one account, watching it grow at whatever rate your bank feels like giving you that month, make sure to hit that subscribe button and give this video a thumbs up if this helps you out, because what I'm about to show you is going to fundamentally change how you think about your cash reserves. Here's the thing that drives me absolutely crazy about traditional savings advice. Everyone tells you to build an emergency fund, which you absolutely should, and to put it in a high-yield savings account. Great. Solid advice. But then what? You just let it sit there in one account with one interest rate, subject to the whims of that one bank's rate adjustments? Let me paint you a picture. It's October 2023. You've got $20,000 in your emergency fund sitting in popular online bank X, earning 4.35% APY. You feel great. You're responsible. You've made it. Fast forward to March 2024. That same bank has quietly dropped their rate to 4%. You didn't notice because you're busy, living your life. By September 2024, it's down to 3.75%. Here's what most people don't realize. That didn't happen because interest rates dropped. The federal funds rate barely moved during that period. That happened because banks play a psychological game with your money. They lure you in with a competitive rate, then slowly, so slowly you barely notice, they drop it, banking on the fact that you won't move your money because, well, moving money is annoying. And they're right. According to a 2024 study by Bankrate, 67% of people who opened a high-yield savings account never switched banks, even when their interest rate dropped by more than a full percentage point. 67%. That's leaving real money on the table, people. Now you might be thinking, okay, John, so I should just constantly chase the highest rate and move my money every time a bank offers an extra 0.10%? No, that's exhausting. And honestly, the juice isn't worth the squeeze for tiny rate differences. This is where the high-yield savings account ladder comes in. And this is where it gets really interesting. The concept is simple, but the execution is where the magic happens. Instead of keeping all your savings in one account at one bank, you split it across multiple accounts at different banks on a strategic schedule that maximizes your interest while minimizing your effort. Let me show you exactly how this works with real numbers. Let's say you've got $24,000 in your emergency fund. That's a solid 6 months of expenses for someone spending about $4,000 a month, which is pretty typical for a single person or couple in a medium cost of living area. Traditional approach: $24,000 in one account at Bank A, earning 4.20% APY. Annual interest, $1,008. Ladder approach: you split this money across 4 banks with $6,000 in each account. Bank A, $6,000 at 4.20% equals $252. Bank B, $6,000 at 4.35% equals $261. Bank C, $6,000 at 4/50% equals $270. Bank D, $6,000 at 4.60% equals $276. Total annual interest, $1,059. That's an extra $51 per year. You might be thinking, John, seriously? 51 bucks? That's not even worth the even hassle. And look, I hear you. But here's where the psychology shifts, and this is crucial. That $51 is just the baseline optimization. The real power of the ladder isn't the slight rate difference between banks today. It's what happens over time, and it's the behavior change it creates in you. Here's what nobody tells you about high-yield savings accounts. The rates are constantly changing. Not by much day to day, but over months and years, there's significant movement. When you've got all $24,000 in one account, moving it is psychologically heavy. It feels like a big deal. You've got to find a new bank, open a new account, initiate a transfer, wait 3 to 5 business days, update any automatic transfers, close the old account. It's a whole thing. So you don't do it. You let inertia win. But when you've got your money split across 4 accounts with $6,000 in each, moving one chunk of money is way less intimidating. It's only a quarter of your stash. The psychological weight is literally 75% lighter. Here's the system. Every 3 months, you evaluate your 4 accounts. You find the one with the lowest rate. Then you spend 20 minutes, that's it, just 20 minutes, finding a bank with a promotional rate or a better standard rate than your worst performer. You move that $6,000 to the new bank. Now you've got a fresh account probably earning 0.25% to 0.50% more than the account you closed, and you've done it without disrupting the majority of your money. Let's run the math on this over a year with realistic scenarios. January. You've got your 4 accounts averaging 4.40% combined. April. Bank A drops to 3.90%. You move that $6,000 to Bank E offering a 4.75% promotional rate. New average, 4.52%. July. Bank B drops to 4.10%. You move to Bank F at 4.65%. New average, 4.60%. October, Bank E's promotional rate ends, dropping to 4.20%. You move to Bank G at 4.70%. New average, 4.57%. End result. Instead of earning $1,008 from the static 14% example, you've earned approximately $1,101. That's an extra $93 for less than 2 hours of work total across the entire year. That's a $46.50 per hour task. Show me another task you can do from your couch in your pajamas that pays $46.50 an hour. But here's what's really happening beneath the surface. And this is the part that makes the ladder strategy so powerful from a behavioral psychology standpoint. When you have one account with all your money, you develop what I call savings account attachment. That account becomes part of your identity. You're an Ally Bank person or a Marcus person. You've got the app on your phone. You check it regularly. It feels like your bank. This emotional attachment is exactly what banks are counting on. They know that once you've been with them for 6 months, the odds of you leaving drop dramatically, even if they cut your rate. The ladder strategy breaks this attachment. You're not loyal to any one bank. You're loyal to your money and getting the best return for your savings. You become what I call a rate mercenary, and that's exactly what you should be. Think about it this way. If you had 4 different jobs and one of them cut your hourly wage by 10%, would you keep working there just because you've been there for 6 months? Of course not. But that's exactly what you're doing when you let a bank drop your savings rate without moving your money. Now you might be thinking, John, this sounds like a lot of accounts to manage. What about account minimums? What about monthly fees? What about the hassle of tracking everything? Look, I'm not going to lie to you and say this requires zero effort, but let me break down the actual reality versus the perceived complexity. Account minimums. Most high-yield savings accounts have zero minimum balance requirements. The big players like Ally, Marcus by Goldman Sachs, American Express Personal Savings, Capital One 360, Discover, none of them require minimums. The ones that do typically require 25, which is nothing. Monthly fees. If a high-yield savings account charges monthly fees, you don't use that bank, period. It's 2024 going into 2025. There are literally dozens of fee-free options. This isn't even a consideration. Tracking. Here's where you need to be smart. I use a simple spreadsheet. Google Sheets, totally free, with 5 columns. Bank name, current balance, current APY, date opened, notes. I update it once a month. Takes literally 3 minutes. That's it. You can also use aggregator apps like Monarch Money or Copilot if you want automation. But honestly, with just 4 accounts, the manual tracking keeps you more engaged with your money anyway. This is where it gets really interesting and where you can start optimizing even further. The basic ladder I described is what I call a rate optimization ladder. You're focused purely on getting the best rates available at any given time. But there's a more advanced version called the bonus ladder, and this is where things get spicy.
This has to be a mistake.
Here's something banks don't advertise loudly, but they definitely
Automated
do.
savings enabled.
Sign-up bonuses for savings accounts. Not as common as checking account bonuses,
not
but
bad.
they exist, and they can be substantial. For example, as of when I'm recording this, you can find banks offering
as the water heats gradually.
$200
suddenly,
bonus
the
for
danger is
depositing
acute, and he realizes
$15,000
he should have
and
reacted
maintaining
sooner.
it for 90 days. $300 bonus
Wow.
for
2 times the
$25,000
difference.
maintained for 180 days. $150 bonus for $10,000 maintained for 60 days. Here's the strategy. You ladder your accounts specifically
I want
to
to draw
capture
your attention
these
to this
bonuses
line
while
right here.
maintaining your
We
emergency
have
fund liquidity.
$50,000 in available
Let's map
cash,
this out with
ready
that
for
same
deployment.
$24,000
$3,000
emergency
total
fund.
additional investment.
Month 1 to 3, $15,000 in Bank A, earning 4.20%
As you can see, we grew
plus
$3,000 to $4,020 in just 5 months.
$9,000 in Bank B,
The trigger
earning
for the 5 percentage point rule is
4.40%,
when the current rate
fully
goes 5
liquid.
points above the target rate.
Month
That's
4,
1, 2,
6.
3, 4, 5 points.
Bonus from Bank A hits, $200. Move $10,000 from Bank A to Bank C, earning 4.50% plus working toward $150 bonus. Keep $5,000 in Bank A, still earning 4.28%. Keep $9,000 in Bank B, still earning 4.40%.
Free money!
Month 7 to 9. Bonus from Bank C hits, $150.
With an HSA account, you
Move
get the triple tax
$15,000
advantage.
from Banks A and
Tax-deductible
C to Bank
contributions,
D,
tax-free growth,
earning
and tax-free withdrawals.
4.35% plus
It's simple.
working toward
Look at rung
$200
6 right here.
bonus.
That's $2,500 in monthly
$9,000 in
payments,
Bank B,
guaranteed by your Social
still
Security
earning
benefits card.
4.4%. And you keep cycling through these bonuses. Here's what this looks like over a year. Base interest on $24,000 at average, 4.35%. $1,444.
If you want to
Sign-up
invest in the
bonuses,
total stock market, VTI or
$550.
VTSAX is really all you
Total
need.
earnings,
They are diversified, low cost, and incredibly effective.
$1,594.
As you can see, analyzing
Compare
20-year
that
periods
to the static
shows
single account
0%
earning
losses. It's a
$1,108.
guaranteed strategy.
And you've made an extra $586 with the bonus ladder strategy. That's real money. That's a weekend trip. That's
When we
several
examine
months
the
of
leaders in the
groceries.
tech space,
That's
companies like
meaningful.
Apple, Microsoft, and
Here's the
Amazon
thing that people always
consistently
bring
show
up.
strong growth potential.
But John,
The American
my money is
capitalism
spread
track
across 4
record
banks,
speaks for itself.
what happens if I
We
need
should
it
all be
in
proud
an
of this
emergency?
progress.
This is a
This
completely
VTI
valid
fund is an
concern,
excellent choice,
and it's why the
especially
ladder
when you look at
strategy
the expense
requires
ratio.
one crucial
Only
element. You need to
0.05%.
maintain what I call your
Stocks,
first
bonds,
response
diversification,
fund in your
low
most
fees.
accessible account.
Now
my
I understand the
recommended
index
structure.
fund structure.
Tier 1,
The bond
30%
acts
of
just like this
emergency,
spring here.
30%
When the
of
market
a
experiences a
fund.
shock, the bond compresses,
1 month of
absorbing the
expenses in
volatility
your
and
most
protecting your
liquid,
principal
most
investment.
accessible
Invest
account.
confidently in these bonds.
This is the account
They
linked
offer
to your
reliable
checking
returns
with
backed by
instant
industry
transfers,
leaders like Microsoft
maybe even
and
an ATM
Coca-Cola.
card. If something happens, this is what you tap first. Tier 2, 40% of emergency fund.
The portfolio
Spread
is
across
heavily
2
weighted
accounts
towards
with
residential
2 to
and
3 day
industrial,
transfer
totaling
times.
65%. The
These are
remaining
your high-rate
35%
accounts
is
where you're
why
actively
deal with the
ladder
hassles
climbing.
of broken pipes and
Tier
evictions
3,
when you can have
30%
passive
of
income,
emergency fund.
dividends, and growth
The account
with
where
a
you're
REIT.
meeting bonus requirements
We've got you
or
covered
taking
for all
advantage
your
of
real estate
promotional
needs.
rates.
From
Even
modern
if
warehouses and
transfers take
apartment
3 to 5
complexes
days.
to vital cell
With
tower
this structure,
locations,
you've always got
residential
immediate
REITs
access
specialize
to
in
1
apartments
month
and
of
multifamily
expenses,
homes.
and you can
They offer
access the
investors
rest
key
within a
benefits
week
like
if needed.
income from rent and
For
portfolio
99%
diversification.
of emergencies, that's totally fine. Real emergencies that require immediate access to 6 months of expenses
As you can
are
see, the
incredibly
current
rare.
yield on $50,000
We're
at
talking catastrophic
3.2%
job loss
is a
combined
very
with immediate
satisfying
large expenses.
$1,600.
This
And even
timeline
then,
clearly illustrates
you've
our
got a
enduring
month
strength,
instantly
successfully
accessible
navigating
and credit cards for
everything
the
from
gap.
major
Look, here's
recessions and
what-
global conflicts
Look,
to pandemics.
most people don't realize about the
22.8%
real
yield.
value of the
Are
ladder
you
strategy.
seeing this? A
And this is where the
$10,000
math
investment
gets
returns
truly
over
exciting.
$2,000 annually.
It's not just
The
about
NOBL
earning an
fund
extra few
utilizes a
$100
proven
per
index
year
approach,
on your emergency
focusing
fund.
specifically on the
It's about
S&P
the
500
behavior
dividend
change
aristocrats,
and the
as you
compound
can see in these
effect
charts.
on your entire
A
financial
full
life.
33% cheaper.
When you implement a ladder
Now that's what I
strategy,
call
you're
value
training yourself
investing.
to be active with your money rather than passive.
To achieve true international diversification,
You're checking rates.
we are targeting key
You're
growth
comparing
regions.
banks.
Europe, Japan,
You're opening accounts.
Australia, and Canada.
You're moving
Our
money
strategy is
strategically.
clear. Buy when cheap.
And
And
here's
as
what
you can
happens.
see from these international
That
valuation
mentality
metrics, that
leads
approach
into
consistently
everything
pays
else.
off.
This equation right here is
People
the key.
who
A
actively
weak
manage their
currency actually
savings accounts
boosts international
are
gains by
3.4
making our
times more
exports
likely
cheaper
to
and more
rebalance
competitive
their
globally.
investment portfolios
Comparing
regularly.
VEA and
according
VXUS
to a
side by side,
2023
the
study by
decision really
Vanguard.
comes down to fees
They're
versus
2.7
diversification.
times more likely
The
to
mature
shop
economies
around for
checklist
better
includes
credit
the
card
USA,
rates.
Germany, Japan,
They're
the UK,
significantly
Canada,
more
and
likely to
France. We
negotiate
have
their
successfully
salary.
checked all the boxes.
The ladder strategy
this
isn't
real
just
money?
about the money you earn on your emergency
I
fund.
don't
It's about
understand.
becoming the kind of person who optimizes every aspect of their financial life. Let me give you a concrete example from my own life. I started implementing the ladder strategy in 2021
This path
with about
ensures you are well
$18,000
funded
in
for
emergency
retirement.
savings.
But this path, if
That
ignored,
first year,
clearly
I
shows
earned
the
an extra
risks of being
$120
This is the problem
compared
right
to leaving
here.
it all in
The
one account.
1998 study is
Cool,
outdated.
but
we
not
cannot
life-changing.
rely on the 4%
But that
rule
process
anymore.
got me
I keep
comfortable
telling
with
you,
opening
the
accounts,
assumptions in the
reading
1998
fine
Trinity
print,
study no longer hold
comparing
up.
rates,
We need to revise our
tracking
withdrawal strategy
performance.
immediately, or we will run out of funds.
6 months later,
The small
when I was
print
looking
here
at
seems to
refinancing
contradict
my
the
mortgage,
4% rule
I didn't just go
entirely.
with my current bank like I
This
probably
is
would have
highly
before.
suspicious.
The
I
inflation
shopped
rate has
around to
increased
7
by
different
3%
lenders,
year over year.
and I found a
This
rate that was
sustained increase is cause for serious
0.375%
concern in the
lower
current
than my
economic
current bank's
climate.
offer.
Unfortunately, the
On a
4% rule has
$300,000
failed.
mortgage,
We must
that
adjust
saved
our
me
strategies accordingly.
$67,500 over the
The
life
financial
of the
crisis
loan.
in 2008, the dot-com bubble in 2000, and let's not forget the
$67,000
oil crisis back in
From
1973.
the same
This trend
mentality
is
I developed
unsustainable.
by chasing an
I am
extra
thrilled to announce that
$120
both
in
Sarah
savings
and Tom
interest.
have successfully grown their
All right,
investments to
let's get
over $1
tactical.
million each.
If you're sold on this, and you want to implement the ladder strategy, here's exactly what you do. Step 1. Calculate your actual emergency fund needs.
We won big
Not what
for
some
Sarah.
blog post told you, but your specific needs.
Statistically, this should
3 to
balance
6
out, but
months
as
of
you can see,
expenses
the odds
is
are
the
clearly
standard
against me
range.
today.
But if you're a single-income household,
The
or
key
you work in
takeaway
a
from
volatile
Keyval's analysis
industry,
on the safe savings rate
maybe
is
you need
this.
more.
We can achieve a 95%
If you're dual
retirement
income with
success
stable
probability or
jobs,
more. The key
maybe you
takeaway
need
from Keyval's
less.
analysis on the safe savings
Step
rate
2.
is this. We can
Determine
achieve
your
a
tier
95%
structure.
retirement success
Using my
probability.
30-40-30 split, if you need
Start at 5%
$24,000
today
total,
and watch
that's
your savings grow.
$7,200 in Tier 1,
This card says if the market is down,
$9,600
it
in
stays
Tier
the
2,
same.
Split
But this
across
one
2
says if the
accounts
market
at
is up,
$4,800 each.
I'm excited to show you the new
$7,200
higher
in
withdrawal
Tier
amounts
3.
available, complete
Step
with
3.
robust guardrails to
Research
protect
current
your
rates.
savings.
Websites
I'm referencing
like
the foundational work by Guyton and
depositaccounts.com
Klinger
and
here,
bankrate.com
specifically their findings on
update
establishing
daily
source
with current
credibility.
high-yield savings rates.
This is Bucket
Don't
1,
just look at the
covering your
advertised
needs for the
rate.
next 1 to
Check
2
if
years.
it's a promotional rate that
It's
expires
safe and secure.
and what the standard rate is
With
after
Bucket
that.
3, we're focused on the
Step
long
4.
game. That's
Open
10
your
plus
Tier 1
years of
account
targeted
first.
growth potential.
This is your priority access
We're
account.
looking at 5 to
Look
7
for
years of guaranteed
no fees,
safety.
no minimums. Instant or same-day transfers to your
This
checking
certificate
account.
here represents
Competitive
Bucket 2
rate.
in your
Doesn't
portfolio
have to be
strategy,
the highest, but should
specifically
be above
targeting the
4%.
3 to 10-year maturity range.
FDIC
Here.
insured,
It's quite
non-negotiable
simple.
popular options
We use the
as
blue
of
bucket
now.
for intake, the
Ally
red bucket
Bank,
for processing,
Marcus,
and the yellow bucket
by
for
Goldman
distribution.
Sachs,
As you
American
can see on the
Express
graph, our
personal
market timing
savings.
strategy successfully
Step
navigates
5.
volatility, ensuring
Fund
your
your
bucket
Tier 1
refills are
account
executed
and make
at
sure the
optimal
transfer
moment.
process works
The
smoothly.
key takeaway here
Link
is
it
the
to your
relationship
checking
between
account.
age and RMDs.
Do a test transfer
Our
both
projection
ways.
shows a clear upward
Make
trend.
sure you're comfortable with
Look
the
at this
interface.
statistic from the Scott
Step
Cederberg
6.
research paper.
Open your Tier 2
A
accounts.
96%
Here
success
you're
rate.
optimizing purely for rate. These can be newer banks or less well-known institutions, as long as they're FDIC insured. You
Emotion
might
pulls
find
us down,
online-only
while
banks
logic
or
lifts
credit
us up.
unions offering
But
better
true wisdom
rates.
is finding the balance
Current
between the
high-rate
two.
options to research.
These are our
Bread
basic
savings,
needs: food,
CIT
shelter,
Bank,
clothing,
UFB
and water.
Direct,
On the other hand,
Basque Bank.
wants are things like toys,
Step
games.
7. Open your Tier 3 account. This is where you hunt for bonuses or promotional rates. Check NerdWallet's bank
Wait,
bonus
a
page,
cruise and a new house?
DrOffCredit.com's
That is
bank
absolutely
bonus section,
reckless
or
spending.
Fat
You
Wallet
can't do
finance
this.
forums for current offers.
An HSA is
Step
the
8.
smartest way to save
Set
for
up your
healthcare.
quarterly review.
I highly
do mine on the
recommend
first
setting
Sunday,
one up
mine
today.
on the 1st.
The
Of
key
January,
takeaway
April,
from
July,
Michael
and
Finke's
October.
research right here:
I check my
a
4
verifiable
accounts, compare
20
their
to
current rates to what's
30%
available,
increase in
and
withdrawal
decide
rates.
if any moves are worth making. The threshold I use. If I can gain 0.25% or more by moving an account, I do it. If there's a sign-up bonus worth more than $100, I consider it, even if the rate is
We
slightly
utilize
lower.
a combination approach,
Step
integrating
9.
the bucket strategy
Track
with
everything
crucial
in a simple
guardrails to
spreadsheet.
manage risk and
Columns
secure
I
growth.
use.
Look closely.
Bank
When you
name,
combine Social
account
Security
type,
with this pension
current
annuity
balance,
certificate, you
current
unlock
APY,
guaranteed lifetime income you
date
can't
opened,
outlive.
promotional rate,
In the research provided
end
by
date,
Meyer and
if
Reichenstein,
applicable,
this is the
bonus
credible,
earned, if
authoritative
applicable.
reference we've been waiting for.
notes.
With us,
This takes
you get
3
a
minutes per
guaranteed
month
return.
to update and
And
gives
the
you
best
complete
part,
visibility
it's
into your
inflation
savings
adjusted.
strategy.
This is the
Look,
opportunity you've been
I'd be
waiting
doing
for.
you a
In
disservice
early
if I didn't
retirement,
talk
your
about the
tax rates
potential
drop dramatically,
downsides and how to
potentially
avoid
saving you
them.
a fortune compared to your working
Problem
years.
number 1,
Understanding the sequence
account
is key.
churning addiction.
You start here with taxable accounts,
Some people get
then
so
move
into
into
the
your
bonus
tax-deferred
game that
options,
they're opening
and finally
closing accounts
maximize your
every
Roth
month,
contributions.
chasing
The Wade Phelps
$50
study confirms
bonuses
a
with
significant impact
$5,000
demonstration.
deposits.
We're seeing a 15
This
to
is not worth
25%
it.
improvement in success rates,
The
which is
time,
phenomenal.
investment exceeds the return,
market.
and you're
Sell
creating a ton of
everything.
unnecessary complexity. My rule? No more than 2 account
can't
opens per
believe
quarter,
this.
unless there's a truly exceptional
$108,000 a
bonus,
year.
like 300 plus.
$107,000.
Problem
That's
number 2.
insane.
Missing
A
bonus
balanced approach
requirements
for your
and having to
retirement
pay back the
portfolio
bonus.
allocation means holding 60%
This happens
in
when people
stocks
don't read
and
the fine
40%
print.
in bonds or
A
cash.
bank offers
Consider this
$200
practical
for
solution.
depositing
Utilizing
$15,000
part-time work
and
options
maintaining
is a
it for
smart way to
180
ensure
days.
you always have a reliable
You
backup
deposit
plan.
This chart demonstrates
$15,000,
the
get
statistical
the bonus
reality.
after 90
There is a
days,
50% chance
think you're
one of you
good,
lives to 90,
and
but only
withdraw
a 10% chance that both
$10,000.
do.
A balanced retirement
Boom.
portfolio
The
typically
bank
holds
claws
40
back
to
the
60%
bonus
in stocks.
because you didn't
This
maintain the
allocation
balance for
provides
the
both
full
growth
180
potential
days.
and stability.
Did you see this?
Solution.
A Canon
Set
8000 a
calendar
year for
reminders for
long-term
every
care.
bonus
That is
requirement
an absolutely
deadline.
shocking
And
cost.
don't touch the
Chuyo
money until
Hanmogen.
you've met all the
We've
conditions.
proven the strategy works.
Problem number
Now
3.
it's your turn.
Falling
Let's
below
achieve
FDIC
greatness
insurance
together.
limits.
A Roth
FDIC
IRA
insures
truly
up to
is the ultimate emergency fund
$250,000
backup.
per depositor.
As you can see,
per
it provides
bank,
a secure
per
safety
ownership
net for your
category.
savings.
Look at this
If
gap.
you're wealthy enough that your
2.1
emergency
million
fund
down to
exceeds $250,000,
We
you
need to
must
fix this
spread it
now.
across multiple banks to maintain full coverage. Even if you're below that limit per account, Remember that FDIC insurance is per bank, not per account.
We finally
If you have a checking account and a savings account at the same bank, the $250,000 limit covers both combined. Problem number 4, banks that make it hard to leave. Some banks will hold your funds for verification when you try to close an account or initiate a large transfer. This is rare with reputable institutions, but it happens. Solution? Stick with well-known, established banks for your Tier
1.2
1
million to
accounts.
0. How?
Get experimental
This
with Tier
is
2 and Tier
impossible.
3, but your immediate access money should be with a bank that has a solid reputation for customer service. Problem number 5.
As the market
Letting
dropped,
perfect
we deployed the
be the
first
enemy
tranche at
of
the
good.
10% trigger point, and
This
the
is the
second
biggest
right
one.
here at 20%.
People get so overwhelmed by the idea of optimizing that they do nothing at all. They keep all their money in a checking account, earning 0.01% because setting up even one high-yield savings account feels complicated. Don't do this. Even a basic 2-account ladder, one
Inflation
Tier
is
1
rising.
and
You
one
must
Tier
sell
2
now.
is infinitely better than letting your emergency fund rot in a
Breaking
checking
crypto
account.
alert. Major crash imminent.
Here's something
It's
I find
crashing.
absolutely
We lost
fascinating from a
everything.
business psychology standpoint. Banks make money on deposits by lending them out at higher rates
By
than they pay
strategically
you.
placing your index
When you
funds and
deposit
stocks into these taxable
$24,000
accounts,
and leave it
we
there for 5
optimize their
years,
positioning for
that
maximum
bank
growth
has
potential.
$24,000 of stable, predictable capital they can lend out at, let's say, 7% while paying you 4%. They make
Over 30
3%
years,
on
low
your
growth
money
gets you very
risk-free
little.
from
But
their
look what
perspective
happens when you aim for
for as
high
long
growth.
as you leave it
You
there.
reach a staggering
But when you
$2.1
implement a
million.
ladder strategy and you're
Yes.
moving money every
Start
quarter,
the new year
suddenly
right
that
and increase your
$24,000
contribution
is
by
unstable capital.
1%.
The bank can't reliably
We're looking
lend it
at a
out long-term
catastrophic
because it
10%
might
drop in the
disappear
market
3
cap.
months. This
This
is why
trigger
banks
point signals
offer
a
promotional
sell-off.
rates and sign-up bonuses.
A
They're
20%
trying to
market
lock
drop
you in.
immediately triggered this
They're betting that once
$2,000
they have your
investment
money,
opportunity.
inertia will keep you there even when they drop your rate
The
later.
August recovery is
The ladder
complete.
strategy is you
We are
calling
back
their
to
bluff.
where we were.
You're saying, I'll take your
This
promotional
circle highlights
rate,
the
I'll take
allocation
your
drift we're
bonus,
seeing. We're
and then I'll
currently at
leave when you drop the
73%
rate.
stocks, far
And
exceeding
there's
our
nothing
target
they can do
allocation,
about
which
it
exposes us to
because
more
you're
risk.
playing within
Look
the
at
rules.
this. An
You're just
instant
playing the game better than
100% return on
95%
your
of
company
people do.
match. You won't
Let me
find
be
a better
really honest
deal
about the time
anywhere.
this takes.
And
Because
this is
I
the
think a
sweet
lot of
spot,
personal
rung 4.
finance content
That 4
either
to 6%
undersells or
REIT yield
oversells
provides a
the effort
stable and
required.
attractive income stream
Initial
for your
setup,
portfolio.
one
From our
time,
founding in
2 to 4
1926 all the way to the present day,
researching
we have
banks,
consistently
1
delivered
hour,
innovation and
opening
achieved
accounts,
remarkable growth
1
year
to 2
after year.
hours,
When stocks
setting up
crash and show
tracking,
significant loss,
30 minutes,
it's important to remember
linking
that
accounts
bonds
and
can provide
testing
a stable,
transfers,
safe, and
30
consistent
to 60
alternative.
minutes,
The stocks dropped from
ongoing
200K to
maintenance,
160K.
monthly
But
tracking update,
fortunately, the
3
100K in
minutes,
bonds rose to
quarterly rate review,
105K.
20,
We've
30
allocated
minutes,
40% of the
moving
total
money when
portfolio
beneficial,
strategy specifically to
30
bonds,
minutes per move.
ensuring a balanced
If you
approach.
do this quarterly,
And the
that's
key
2 hours
takeaway
per
from the
year.
NARET 2023 study
Total
is
annual
right here.
time investment after
We're seeing
setup,
8% lower
approximately
volatility.
4 to 5 hours
The main
per
types
year.
of REITs include equity,
For the
mortgage,
extra
and hybrid
$200,
varieties.
$600
Understanding
you
the
might earn,
differences is key
depending
to
on your
making
balance
informed
and how
investment
actively
decisions.
you manage it.
This projection
That's
is fantastic.
$40,
We're looking at
$120 per
75,000
hour.
soaring up to
Compare that to any
177,000
side
within the
hustle, any
decade.
overtime at work,
As you can
any
see,
consulting gig, and
diversifying
tell
your
me it's not
portfolio
worth
across
it.
various sectors like
But
these
here's the thing
REITs
that's
is
really at the
essential for
core of why
long-term
I'm so
growth.
passionate about this strategy
25 plus
and why I
consecutive
think it
years
matters
of
beyond just
dividend
the dollars
increases.
and cents. We live in a financial system that is designed,
This strategy
intentionally
provides a dual
designed,
benefit.
to
First,
extract
stable
value from
dividend
people
income,
who are
and second,
passive and
significant
reward
price
people who are
appreciation,
active.
giving you 2 ways to win.
Banks offer low rates to passive customers and high rates to rate chasers. Credit card companies offer terrible terms to people who don't read agreements and great rewards to people who optimize. The stock market rewards investors who rebalance and punishes those who panic sell or never adjust their allocation. The latter strategy is practice for active financial citizenship. It's you deciding that you're not going to be the person the financial system extracts value from. You're going to be the person who extracts value from the system, and once you internalize that mindset, once you become the kind of person who actively manages their money rather than passively letting it sit, everything changes. You start reading your credit card agreements and switching to better cards. You start shopping around for insurance every year instead of auto-renewing. You start tracking your subscriptions and cutting the ones you don't use. You start negotiating your bills. You start investing intentionally rather than just doing whatever your employer's 401k default is. The latter strategy is a gateway drug to financial optimization, and that's exactly why it's so powerful. All right, here's what I want you to do immediately after watching this video. If you don't have an emergency fund at all, stop. Before you implement any ladder strategy, build at least $1,000 in a basic high-yield savings account. One account. Keep it simple. Once you have 3 months of expenses saved, then come back to this video and implement the ladder. If you have an emergency fund in a checking account or traditional savings account earning less than 3%, open one high-yield savings account today, right now. Don't overthink it. Ali Marcus Amex, pick one and move your money. You can optimize with a ladder later, but first, just get your money working harder than it is now. If you already have a high-yield savings account, but it's all in one place, implement a basic 2-tier ladder this week. Keep your current account as Tier 1. Open one new account with either a better rate or a sign-up bonus as Tier 2. Move half your money to the new account. Congratulations, you now have a ladder. If you're ready to fully commit to the advanced ladder strategy, block out 2 hours this weekend. Research 4 banks. Open 4 accounts. Split your emergency fund across them using the 30-40-30 structure I outlined. Set up your quarterly review calendar. Build your tracking spreadsheet. You're now operating at a level that 95% of people never reach. Look, here's the thing that frustrates me about most personal finance advice. It's either so basic that it's useless, save money, or so complex that nobody actually does it. The high-yield savings account ladder hits a sweet spot. It's sophisticated enough that you're genuinely optimizing and getting ahead of 95% of people. But it's simple enough that you can implement it in an afternoon and maintain it with 5 hours per year of effort. For most people watching this, the ladder strategy will earn you an extra $200, $600 per year on your emergency fund. That's nice, but it's not life-changing money. What is life-changing is the mindset shift from passive to active money management. It's the skills you develop. It's the confidence you build. It's becoming the kind of person who doesn't leave money on the table. Start with your emergency fund. Master the ladder strategy. Let that momentum carry you into optimizing your credit cards, your investments, your insurance, your entire financial life. Because here's what I've learned after years of obsessing over this stuff. Personal finance isn't about having the perfect strategy. It's about having a system that works for you and actually implementing it consistently. The high-yield savings account ladder is that system for your cash savings. It works. It's proven. And it's accessible to anyone watching this video right now. So stop leaving money on the table. Stop being the customer banks profit from. Start being the customer who profits from banks. Your future self will thank you for those extra few $100s per year. But more importantly, your future self will thank you for becoming the kind of person who takes control of their financial life. If this video helped you, give it a thumbs up, subscribe if you haven't already, and drop a comment letting me know if you're going to implement the ladder strategy. I read every single comment, and I want to hear about your wins. Now go open some accounts. Your money's been lazy long enough.